Hey, this is Lion Trader here, aka Leo. I think I was going to take a minute and explain how these hedge funds, and it's not even just hedge funds, it's really any of these financial institutions that actively trade in all markets. This is one of the algorithmic strategies that they use to trade them. You can see this in futures, crypto, stocks, really anything, but today we're going to be looking at AMC and how it would pertain to them. But first I'm going to have to explain how this algorithm functions. It functions on all time frames, and it almost functions like it does function like Russian dolls, how you have larger moves within smaller moves. And so the one tool we're going to use is the Fibonacci retracement tool. So the blue line represents price. Now, if you start here, assuming the trend is going to be up, you would start at the low and you would pull to the high of that price action. So there we have this is called in technical analysis, people refer to a measured move as many different things, but for the sake of this lesson, this is a measured move. So price has moved up, and now these algorithms will start to buy as price returns to the 50% retracement, and they will continue to buy as you come down here to the golden zone. So back to what I was saying about Russian dolls is that you have smaller ones within that bigger one, right? So, and it will stair step its way up. So their target is going to be the negative 236 up here. And so on the smaller scale, essentially what they're going to do is they're going to buy that 50 profit target, and then they're going to be looking to buy the next 50, and so on and so forth. So you'd be looking at, I'm just going to clean this up a bit. Right there. Okay. Now you can see that you have this larger move, and then you have these smaller moves that make up the bigger one. This is how they move price. This is very basic. It's been around a very long time. But they just buy, they buy, they buy, and it drives the price up. In combination with wash trading, we see this a lot in crypto. It makes it very easy for them to move price where they want it to go to an extent. Now, within this one, you have the same thing that would be happening, is you would have smaller moves within this one. And that is how they're able to move the price. And so on and so forth. It's going to get a little messy if I just start doing that. And it gets more complicated than this. This is just a very basic explanation of it. But I needed y'all to understand that before I go on to explain a little bit more about one of the methods that they're using with algorithms to manipulate the price of AMC. Let's go ahead and clean all this off of here. But hopefully that is pretty clear to y'all. Alright, now, let's see here. Okay, so we're looking at AMC on the 15-minute time frame, and we're just going to see if we can't find some of these moves within the market and see how price is being affected. So I'm just going to start here, and I'm going to go down to the swing. Boom. Right there at the 50. Look at that. And so then they're looking for the negative 236. Now this one did go far beyond the negative 236, which then goes into extensions, which are different. So I don't know if I really want to get into all that. But basically, whenever you get an extended measured move, you would want to be pulling from the high rather than up here. You would start from the low there, and you would pull down, and you'd look for a reaction off of that. But we didn't get there, so that tells me that you'd then be looking for an overall measured move, so you would want to bring it back up to there. And as you can see, that is the one that the algos decided to use. You can see that we went exactly to the tick of the 50, came down a little bit, tried to go higher, but then we have that massive bearish bar pushing prices back down. So now let's go ahead and dig in a little bit more and see if we can't see this on a smaller time frame of how these algorithms are manipulating the market. So let's go ahead and let's drop down to the 5-minute time frame. Hopefully it goes back. Yes, it does. Okay, so now let's start from here. So this is the larger 50 that we have pulled, right? And they're targeting that negative 236. It doesn't have to stop there exactly, but they want it to go there. So all you do is you would start there and boom, look at that. Right to the, we call it the golden zone, but right to where it's supposed to go, and it moves off. Now let's see if we can't find another one. Okay, so basically the red line is the 50, the obviously the golden zone is, well, kind of goldish. I'm just going to remove those numbers so that it's a little bit easier to see here. I actually don't keep those on whenever I'm doing this. But, so, now you would come here, and all we're doing is we're looking for where prices are going to go to that 50 again. So we don't really see anything there, but I do notice that we don't get a 50% retracement, and it has gone well past the negative 236, so it's most likely going to be an extended move, so I'm going to pull from the highs, and look at that, to the absolute tick it went. So that tells me now that, let's see here. Okay, and so there's another one to the 50. Let's see. There's another one, just went to the golden zone, and so on and so forth. And they ended up getting their negative 236 target. Now, this strategy, or algorithmic trading strategy, isn't necessarily a bad thing. The way that they're using it is bad because they're using a lot of synthetic shorts and whatnot to be able to get prices to move. But what this does is it actually gives them more liquidity to be able to fight back because they're taking profits on a smaller scale. I'm not saying they're closing all of their shorts, but they are taking profits as it gets to these certain levels, which gives them more capital to be able to fight this battle. So this is just one way that they're able to manipulate price and extract money in the short term. Does that make sense? So if they're, let's say just this one, for example, prices start pulling back, they're loading up on their shorts at that 50, and it's coming down, they're taking profit, and now whatever is driving this, I can't really say because that gets down to really tiny time frames. I mean, this thing, these trades take place on the microseconds. It gets really small. I'm not able to go down that far on my charts, but they're taking profits as it's going down on a small degree. That gives them a little bit extra capital to be able to fight back with. But you can see how exact this algorithm is. I mean, we're talking to the tick, and so on. So it's there. They're using it. In regular markets, this is just how you follow trends. And so what you would then look for is you would look for a break of the series. That's what this is called, is a measured move series. And so there you can obviously see that we get a break and it continues on higher, and they would then reverse and they would start trading in the other direction going up and so forth. But they don't really do that here because they're really wanting to get it down. But that's essentially how this works. See if I can get some more examples here. Looks like they probably took the overall measured move of this one. Yeah, so let's take the overall move again. There it is. Look at that. Exactly to the 50. I mean, so precise. You know, that's how you know that these are algorithms behind this. The algorithms kick in, they start to sell. So, you know, and then you can go again with the smaller time frame. Boom. Exactly to, I mean, you just can't get more precise than that. I mean, you're literally, you can see how it stops exactly, stops exactly, stops exactly, stops exactly. I mean, this is how all markets move, or at least one way that they move. Trying to kind of losing my train of thought now. I don't know. What was I gonna? Oh fuck! I hate it when that happens. Anyway, but you get the idea. This is how they manipulate the market. So I figured y'all would find that interesting to kind of look at. Um, yeah, I kind of just ran out of things to say there. I guess once I've kind of explained how this stuff works, there's not really much more to say. But it does get more complicated than this whenever we get into extensions and extended extensions. So I don't necessarily recommend trying to trade this way, but they certainly are. And if this isn't enough proof of that, I don't know what can convince you, but these play, I encourage you to kind of play around with it in any market, any asset, and you'll see these moves. But yeah, so that's pretty much it. If any questions, just leave a question in the comment, and I'll try to answer that for you.